Hey friends, and welcome to another session of technical analysis of natural gas markets. So let's have a look at the charts and try to predict what is going to be the move for the week commencing the 5th of Feb, as in next week. Before that, like always, let's take a step back and discuss uh, what actually we spoke of in the last session and how did the markets respect it, or did the markets actually play that out. So if you remember, last week we spoke of this bearish flag pattern here, and this is again the charts of natural gas on an hourly time frame. So this bearish flag pattern, a very beautiful bearish pattern, and then we can see the breakdown, and eventually it has basically reached a target of roughly around, the target was roughly around 2.4 ish or 2.04 ish, and I can see it has already reached the target. And for people who don't know how to trade the flag pattern, please go to the channel. There is a mastering series on flag patterns wherein I have in detail explained what is the flag pattern, how to trade the flag pattern, what is the psychology behind the flag pattern. So appreciate if you can have a look at it. It will give you all the details on how what a flag pattern is and how to trade it. Saying that, let's move on. So clearly see a flag pattern, and then breaking down there, price, basically moving in the downward channel. Now again, as I said, it's a downward channel here. I have highlighted the channel here, and the price is clearly moving down. Now one thing you need to see here is, which is very important, is this zone, or this roughly zone 2.05, is a very strong support so far on an hourly. And the reason I'm saying is because if you look at this, it's been getting supported from roughly around the 29th of Jan. So I think right the entire week it's getting supported on 2.05. So this is the first time it came here. It got a bit of support, bounced back, came back here, got a bit of support, bounced back to a higher level, 2.15, which is a strong resistance at the moment. Again tried to break down 2.05, bounced back, you know and similarly you can see it. You can see a bit, a little bit breaches below 2.05, but look at the very next candle, been rejected straight away. Similarly here, breached, next candle green, breached here, next candle green. Similarly here, breached, next candle green, breach, next candle green, clearly saying that 2.05 is acting as a very strong support so far. Now, in this channel, I can also see something like a rising wedge. A rising wedge is a bearish pattern. This is not exactly a completed pattern, or even it's not a matured pattern. So this is a pattern informing until and unless we see this support broken down and retested. We cannot conclude that this is a rising wedge pattern. It is just forming, and I've just highlighted you know just to make sure that we have this on our chart so we can track it. So we have a rising wedge pattern here. Now for this to negate, and it is very important, for this to negate, we have to close about 2.12. So if we have a candle, you know about 2.12, an hourly candle, and then the very next candle again giving a confirmation about that, then this pattern is negated. Now if you look at it, this is a very important level, 2.12, because look at these prices here, taking support, you know here, look at that. As I discussed for 2.05, same sort of a behavior. Red candle breached, next candle straight away up, then rejected, sorry, supported, bounced up again, tried to breach, again it's been supported here. Once it's breached here, look at here, it's very important. Once it's breached here, then it's retested that, and then it's back down again, tried to get try to breach here, or maybe this level is rejecting now. Similarly here, consolidation, try to breach for a while, back down, retested, that's it. So this level 2.12 is going to be very important level. And the reason I say is because if you look at this line, yeah, well, let me take a brush here. So this is the zone which I am highlighting here. So this is, first confluence is the equilibrium of the wedge. The second confluence is this particular, you know zone, which is 2.12. And the third confluence here, or third thing to watch out here, is, if you look at it, this is sort of a head and shoulder pattern. So if I, you know just take a path here, so this is, you see the left shoulder, the head, and this could be a potential right shoulder if it rejects from. So if I just highlight it here and make it a bit stronger there, and then, so if it rejects from this particular, zone, then it could be a head and shoulder pattern. So that's the reason I'm saying this area is of critical interest. It will define if the markets are going to head in the upper direction, or they're going to reject from there. And then if they reject from here, then I have, potentially seeing the markets breaching the 2.05 level and then still heading down. So, and again, if you look at this, even this is, the top of the channel. So a lot of things are, basically riding at this zone, and this zone seems to be very important zone. And I think maybe the open and roughly around ish Mondayish, I think this will decide what is going to happen here. So we need to keep a watch on the zone, just to make sure that, we are, trying to, read the markets in the right way. So this is again, like a very important zone. So let me get the head and shoulder out here. So okay, and let me get this out as well. So this is on an hourly, clearly a downward channel waiting for a breakout. If it breaks and retests the channel, then again, that is the zone which we discussed, should move ahead or move in the up direction. Otherwise, if it is rejected from this zone, then I think we probably have the potential to see, lower levels. Let's see what we can see on an 4-hour chart. So on the 4 hourly, it is similar, similar structure, nothing great, just sort of big candles here, and exactly the same, same picture what we saw on an hourly. Look at this, this zone which we were discussing, price getting so beautifully supported, try to breach here, but next candle straight up. Similarly, try to breach up. Once it's broken the level, look at the candle size, it's clear, look at this is very important. So I'm going to highlight this here. Look at this, look at the candle size, nice big red candle. Look at the very next candle is the retest. So clearly says, markets were not happy here, and then they have breached this level, but then back here, consolidation. So consolidation is a sign where the markets are still deciding, so it can either head up or down. We discussed what are the areas to look for, so we'll keep a watch on those areas on the Sunday or the Monday session. This way. So this is on an roughly, I would say, a 4 hour. Let's see if I can anything on the fib. So if I take a fib from here and then just put it down on the swing, nothing much on the fib here. So fib isn't, saying much. Maybe I should have taken the upper levels, but that's fine. So if I go to the daily time frame, let's see what the daily says here. So daily saying the same story, but look at these candles. Yeah, so if you remember last time we spoke of this level, look at this, brilliant. Look at here, supporting, broken down. Once it breaks, look at the size of the red candle. Now here it has gone for, retesting. It tried to breach this zone here, but was not able to. If this candle was a green, closing above this, particular red candle, then definitely it was looking to move up, towards the higher prices. But markets not wanting it to go higher, so next candle is red. So at the moment, if you look at it, this is a consolidation zone. So I would say roughly like 2.15 and 2.05. This is the range, roughly around 100 pips. The market is trying to consolidate between 2.05 to 2.1.5, 2.15, sorry. So that's the range the market is consolidating at the moment. And on either side, either the upside or the downside, the market's gonna give a good move. So we need to be watchful to see where the market's heading for. So that's on the daily. Another sign on the daily is here. If you look at this daily, I'm just gonna highlight something here on the daily. Let me take a path here. So if I take the path here, look at this. Okay, and so this is a nice head and shoulder here, and this is the neckline which has been broken, and this is at the moment retesting. So if this pattern plays out, then we are looking at very lower prices, roughly around 1.6 ish. I'm not sure whether we can go there, but as per the technicals, that's what the market's telling, that if these prices, you know this pattern plays out, that's what we are looking for. uh, Roughly around, this will get negated when, if we are about 2.38 or 2.4 ish, roughly. If we close daily about 2.4, then I think this pattern is going to negate. But so far it is telling that the markets are bearish. It We might have a sort of a bounce or so, but eventually looking very bearish at the moment, unless something changes. But looking at the trends, the market's bearish. Next week, as I said, we need to keep a watch on that 2.12 zone, 2.12 to 2.15 zone. That is a very critical zone. If we have moved above that zone, then the markets are trying to head up. Uh, I don't know till what level they will go, but that's the zone to watch out. If they reject from that zone, then we are gonna probably see markets still heading down. So that's pretty much, I think, what I can see on the charts of natural gas markets. And if you find this helpful, please give this video a thumbs up. Please like and subscribe to the channel. One more thing I was thinking of, maybe if this is useful, I would like to have weekly analysis videos on crude oil, or maybe the forex, the dollar versus the Japanese yen. If you think I should be, probably maybe just put in a comment your suggestions. If you want to you know have a go at the analysis of those particular markets, and I would be happy to do some a session something like this. Thank you for your time, appreciate it, and I'll see you in the next one.